Okay, everybody, it's time for a weekly wrap. I apologize for the lateness of this one. I know normally these are coming out on Fridays. Today is Tuesday. Last week my in-laws were in town. My father-in-law is ill, and they're not expecting him to last a whole lot longer, so he wanted to come out and see the grandkids. The last time he saw his oldest grandson, he was only a couple, 3-4 months old. But this time he's 5. He got to interact. It was really great. So that was the reason for the lateness, and I apologize. This week I am going to do something a little bit different. This is going to be quite a bit shorter as well, simply because I don't want this to take a lot of time. So I want to talk about the outlook for this next week, and then talk about last week. And some of the actual trading strategies you can use during the week in order to make your trading decisions. And I want to preface this by saying most traders will make the mistake of thinking in their minds. Okay, this portion doesn't have to do with trading strategy. It has to do with how traders approach the markets. Myself included, I've got to constantly be aware of this tendency. What we'll do is we'll look at the market making a move down. For example, this market at the high was about 2135, 2.0135, and got down to, I don't know, 9680 or something like that. So there's a big move down here. In fact, from high to low, we're looking at 455 pips. Okay, so the mistake that traders will make is to look at a move down like this in all of its 455 pip glory and wonder, why did I not make 455 pips? Of course, that would mean you'd have to sell exactly here at the top and buy exactly here at this latest low bottom. And I'm here to tell you that the odds of doing this repeatedly and successfully, where you're absolutely top ticking and bottom ticking the market, are slim to none. And quite frankly, you'd be better off going out and buying a lottery ticket. It's just not reasonable, because by thinking about just the move down or just the high to low move, you're failing to realize what happened during the week. You're failing to realize that the market made a significant retracement against the position both here and here. You have no idea if you would have been able to sit through this. Both of these were well over 100 pips. In fact, I think they were a couple of hundred pips. Even this retracement here was fairly large. So while the market is moving, it's also moving in a stepwise fashion. So it moves down, it moves up, it moves down again, it moves up again, it moves down, it moves back up, and then it moves down. So during the course of events, as the market is making this up and down motion, you have to realize that it gets pretty difficult to sit through those kind of swings, which is why traders tend to gravitate to short-term trading systems, in my opinion. Traders love short-term trading systems because then they don't have to face those kind of drawdowns. Because let's face it, when the market is raging its way up like this, okay, from the March low, huge gains in the pound, and then the market pulls back, and then the market pushes right back up, we have no idea if the market is going to stop here. We have no idea. Now we can trade the odds and we can trade the probabilities, but most people at this point are probably thinking, okay, the market's pausing for a week and it's on its way back up. Now let me address that whole problem. So then how do we then trade? How on earth do we get to the point where we can actually go into the market and make some money? Well, it really boils down to just a couple of things. And the first one is money management. Now the key here is we don't know if our money management our plan for money management is actually going to play out. In fact, one of the most common questions I get has to do with my particular style of money management and short-term trading, and there are really two parts. The first part is understanding that we need to have an estimate. And the estimate is simply how far we think the market's going to move. What I like to use is the prior week's range, simply because, for example, with these 2 weeks, on both weeks, the absolute high price was nearly the same. Now, that's a big thing in Forex trading, because remember, if we're looking at a daily bar, or we're looking at an hourly bar or a 4-hour bar,